Hello, this is Data Trader Pro doing a nightly market wrap for January 20th. Wow, we had quite a reversal today. Bearish trend still, but yeah, today might have been a local bottom of note, and something to look forward in the future is a continuation upwards, because it's very rare that we have something like this. Earlier in the day, everything was down about 4% or more. Even look at biotechs were down and so on. To this, biotechs up 3%, so 6 to 7% reversal intraday. Nasdaq about a 4.5 to 5% reversal off lows to close. So big move. And of note, we had let's see. Right, so we had net issues make a lower low today, but net volume did not. It made a higher low, and that was one of our key divergences that we noted. That showed that potentially this was going to be something coming. So that actually happened before we had our big turnaround. And so let's look at the trend page and see basically how the day played out. It was called a bearish trend day early off by our indicators. That fires off at 10:15 a.m. Eastern time, and obviously off open, we did nothing but sell off. All the internals were massively bearish off open, and continued that way for much of the day actually, despite the reversal off lows. Things stayed, in terms of the breadth, advanced declines in net volume stayed quite low for much of the day. We had a full reversal on the dollar-weighted buying pressure during the day, so that was something to note. But again, it fell very close to close in the last 20 minutes of the day, or half an hour of the day. We saw quite an improvement on the DTP MCC, which is our version of the McClellan. It's an intraday, faster moving version of the McClellan oscillator, and that improved greatly as well. So a huge wide range today. SPX 60 points, so massive range today intraday, and that's sometimes what you get at reversals. In terms of average daily range, you tend to see reversals happen when you get a maximum intraday range, and then you find that the trend changes, and then the range tends to narrow. So this is kind of what we see at reversals. Important. Let's go to breadth, and we'll examine some things, because basically what happened was we had our lows on the advanced declines early in the day, and then obviously you can see by the white triangle markers that we pulled back quite a bit. Almost got into neutral territory on NYSE and NASDAQ. Very much so got into neutral to slightly bullish on the Russell. Russell reversed its pattern of being the dog and leading down. It improved greatly. Had a good up move today, off a lower low. So it's a type of spike reversal that you tend to see, at lows. Just to accompany that, we've got a good daily hammer candle on the SPX. The other indexes match as well. So we broke certainly on everything. We pretty much broke. I don't think NASDAQ made a lower low than August actually, but the other indexes did. So SPX, RUT, and so on. So so we may have made a local bottom, but here's the thing that we're waiting for, is volatility to follow through. Now, this morning marked a roll. So VIX rolled, expired on open today, and so we basically moved in the VIX futures from January to February, and now the backwardation between February and March is about half of what it was from January to February post-roll. So the volatility space, certainly VIX made a higher high today, but also closed much closer to its lows than its highs. So we saw a bleed off in volatility with that big rally and reversal today. One thing to watch still is that VXV, the 3-month version of the VIX, is still quite high. So that's, it's as high or higher than the VIX. Short-term volatility didn't really bleed off that much, so still a word of caution. What looked like a reversal hasn't been fully confirmed by volatility. The volatility, the VVIX index went from about 8% green down to below zero. So and it held there. So that's a good sign. When the volatility bleeds off, usually what you're going to get is follow through on the VIX. So, but we have to wait for confirmation. These indexes need to pull back, and we got to quite elevated levels. VIX of 32 is high, and VIX being heavily mean reverting should pull back, towards the 20 region. So we'll see what happens. But if this rally is to continue, volatility is going to have to come off. Otherwise, we're going to chop around, and probably SPX will be headed down south again for another run. We're not sure how far, but this is the big item on the menu for the next day or so. Is to watch for a volatility bleed off, and should we get that, I think we'll be good for a fairly decent rally. Even a rally within a bear market should be 3, 4, 5% at least sometimes. So we'll look for that. Let's go to the block trades page, look for some activity. So basically what we had on SPY was we had a huge print, which we thought might have been a buy at support, because if we went back, the price had been dropping, and sometimes what you get is a huge number at support there. But we fell further. There wasn't a lot of activity in terms of block trades. It's almost as if all of the if it was accumulation, had been done in the previous days, and we had a little spike low and reversal, but we're still below the level, 188.06. We're still below that on SPY. So we're really technically we're bearish still until we get above that level, the 188 level. It's about 22 million shares almost in a single trade there. So that's a large institutional activity. So until we get above there, again with the volatility picture, a little bit of caution is warranted, even though it felt very bullish today. So also we got something here, decent sized transaction on QQQ. Not really a lot to speak of, and it's roughly in the same levels as we've seen here before. So really we're going to have to get above this, sort of 101 level roughly, maybe a little higher in the Qs, and then get above this level, which is the 104. So basically above 101 we're bullish up till maybe about 104. Above 104 we can really run, but that remains to be seen. Some decent size trades in the IWM, and millions of shares at a time. If you ever want to go look and check out these block trades in a little more detail, you can always click on the summary page, and the summary page, say, will open up IWM, and we can list all these, when they happened, what the price was, and so on. So we see 4.5, 5.5, 6.7 million there. These were at the same price. So we're looking in this window, for that maybe to be support. If we can't maintain those levels, then they were more than likely sells, and we have another trip lower to go. So yeah, let's check out the block trades on volatility, ETFs and ETPs. We've got VXX with some 2 million shares, and then we bled off from there. So that that may have been a sell from lower levels. I mean, we've seen some block trades, at slightly lower levels, and certainly last week lower levels. A lot of block trades come into VXX, in the earlier stages of this run up in volatility. So we'll have to see if we again 28.43, that was fairly high. I think we topped out in the 29s to high 29s today. So below that, we're below that now. So below is bearish, right? 28.43, 28.50 area, and so on. So again, when volatility drops, it drops quickly. So if VXX can't recoup that level, then we're looking lower. XIV, there was a pretty large transaction here for XIV. XIV doesn't usually get the size that VXX does, but 1.3 million shares is nothing to sneeze at. Price 1808 after hours. So we'll see if that's somebody selling from accumulation down low, or whether they're buying with the expectation that it goes up. So that's your demarcation point. We'll be bullish above there and bearish below. Quickly look at we can look at metals. So metals have been chopping up and down, and there's always the same pattern lately. We might be starting something bullish in metals, but every time I think we do, we there's a lot of sells and we fall back down. So basically, this was the level we saw buys come in, and then later on a pop we see sells. So I'm not really quite sure. I don't think there's really a pattern that we can sink our teeth into yet. Always on GDX right at close, there's very large block trades. We think that has more to do with rebalancing in the leveraged ETFs that are based on GDX, but these are daily, right at 4 p.m. So this is a huge one. In fact, it was one of the bigger ones we've had lately. So, again, above there, bullish and bearish below. On silver, silver had some accumulation, but look at the patterns. Buying on the lows, selling on the highs, buying on the lows, maybe some distribution up here. The metals. Sector of the market doesn't really seem ready to launch yet. I think there's a large move brewing in metals, but when is the real question. What we're gonna have to see in metals is for large block trades to come in and price to continue higher, and then a series of other trades. You get these little kind of continuation trades to just push it along, and the price doesn't just collapse every time it goes up and get bought every low and every high sold. So that's what's been happening in that complex for the last few months. So hopefully it'll change soon, but otherwise we're going nowhere quickly. Energy, oil made another spike low today. There was some things that were pointing towards, some very large transactions, but they've all been on the way down. And, really, did we hit support, today on a spike low? We have something that looks like maybe an inverse head and shoulders, kind of like the indexes do, and we could continue up. We had, decent size on USO, 3.2 million at 818, but it was looking bullish here, and it keeps bleeding lower. So, these are the levels to look at for USO, or to stay above 818. And then what happens at 849? If we could stay above there, we go back to the last levels to retest up here. Which is about 879, 880, 881. There's a number in that range. So these are your levels. So bullish up to the next 849, 850. Bullish up to there, and above we can really take off. But it's going to have to prove itself. Oil's got a big, at least a dead cat bounce brewing in it. But when that happens again, we really need to see support, and we need to see something coming above those levels, and we can go back up to $10, $50, $11, $12 even in USO. But okay, UNG's been perky the last little while. It bounced reasonably well today off of a fair spike low today. So, and we've been seeing mid-size prints coming in UNG. So nothing really that would start a huge rally yet, but we'll keep watching it. I think that might be, we'll have a look at internals and probably the market map, and then we'll wrap that up. Okay, so we've, these are the advances minus declines on NYSE. Still fairly low. Came up off a spike low, which was extreme, which is probably the lowest, roughly the lowest level, matching the August low. So that's an extreme. So you can kind of, you can see that these are kind of capitulation moves where, they run out of everything to sell. Everything that's going to get sold gets sold, and then you get a long tail, and things start to move back up. We really saw that on the NASDAQ advances minus declines, huge tail, and finished close to neutral. So promising. The one thing I want to look at. So the NYSE composite, another nice hammer, low RSI, looks like a good start for at least a decent bounce. I mean, we'll see what happens, but nice reversal candle on NASDAQ composite as well. The 52-week highs versus 52-week lows still pegged on the bottom in the basement. We'll reconfirm that with the market map. New 52-week highs on NYSE 3, almost nothing, and roughly half of the, less than half, but almost getting close to half of the NYSE index is making new 52-week lows. So we're at an extreme. Extremes can get more extreme, but we're at a point where we had that nice spike up, a nice reversal candle, and some individual stock charts are starting to look a little more promising, at least for a bounce. So maybe that was the extreme low and capitulation move that we needed to start another move up. Same thing on NASDAQ, 52-week lows to 52-week high ratio is extreme. The advanced declines, not really that bad. On NYSE, a little worse than NASDAQ. NASDAQ had a huge, especially the NASDAQ 100 had a huge bounce. Still ended with a bearish advanced decline ratio, but getting towards the neutral range. SP 500 was a little less cheerful. It didn't bounce quite to the same extent, although the trend ended slightly bullish. The Russell ended positive, so you got a little divergence there. Russell, the laggard, is possibly leading now, so we'll see what happens. Dow still bearish, so we're really just the overall picture, just to wrap it up, is a picture of a decent looking start to a reversal started today, but but it hasn't confirmed, and certainly we're looking for volatility and some internals to improve especially in breadth. So let's see that VIX come off, let's see breadth improve, and then we've got something we're happier to be long. Until then, I think we'll take short-term trades and try to play the bounce that way. Okay, that's January 20th market wrap for Data Trader Pro. Thanks for joining. We'll see you tomorrow.